Quadruple Witching, also known as Freaky Friday, is a significant event in the financial markets that can have a notable impact on stocks, risk appetite, and the US dollar. In this video, we will delve into the meaning of quadruple witching and explore its implications for traders and investors. Let's dive in. Quadruple witching refers to the simultaneous expiration of 4 different types of financial derivatives contracts. These contracts include stock index futures, stock index options, stock options, and single stock futures. This event occurs on the third Friday of March, June, September, and December, marking the end of each quarterly period. During quadruple witching, there is typically increased trading volume and volatility in the stock market. Traders and investors may witness heightened price fluctuations as market participants rush to close out their expiring positions or roll them over to the next contract period. This increased activity can create both opportunities and risks for market participants. Quadruple witching can also impact risk appetite in the market. As traders and investors adjust their positions, sentiment can shift, leading to increased market uncertainty. Some market participants may choose to reduce their exposure to riskier assets, such as stocks, during this period. Others may see it as an opportunity to take advantage of potential price movements and increase their risk appetite. The US dollar can experience volatility during quadruple witching as well. The event's impact on risk appetite and stock market movements can influence currency flows. If investors perceive increased risk in the market, they may seek safe haven assets, such as the US dollar, leading to its appreciation. Conversely, if risk appetite remains high, investors may move away from safe haven currencies, potentially weakening the US dollar. Tips for traders. 1. Stay informed. Keep track of quadruple witching dates and be aware of the potential impact on the market. 2. Monitor volatility. Expect increased volatility during this period and adjust your trading strategy accordingly. 3. Use risk management. Implement proper risk management techniques to protect your capital during periods of heightened market uncertainty. 4. Stay flexible. Be prepared to adapt your trading approach as market conditions evolve during quadruple witching. Quadruple witching, or Freaky Friday, is a significant event in the financial markets that can impact stocks, risk appetite, and the US dollar. Traders and investors should be aware of the increased trading volume and volatility during this period. By staying informed, monitoring volatility, using risk management techniques, and remaining flexible, market participants can navigate quadruple witching with a better understanding of its implications. Remember to like and subscribe to our All Things Money channel for more updates and insights on Forex trading and stock market trends. Disclaimer: this video is for informational purposes only and should not be considered as financial advice. Trading in the financial markets involves risk, and individuals should conduct thorough research and seek professional guidance before making any investment decisions.